CFO at Intellect Design, who joins us from the sidelines of the Spark Capital Conference. Hi, sir. Thanks so much for joining in. You had raised your full-year revenue growth guidance to around 26 to around 30% in the last quarter. Based on your current visibility, are you likely to end up closer towards the top end or, in fact, the lower end of this guidance?
I'd like to stay with the guidance we are giving you. We are giving you a range of 26 to 30. So we need to wait. I would like to wait till quarter is over. As of now, we are in line with the range of forecast we are given.
Okay. In your last interview, sir, you also told us that you will be PAT positive by Q4 of FY16. Do you maintain that?
Yeah, we stay with the forecast we are given.
Okay, let's come to the margin picture then. Your gross margins have been inching up higher. Do you see your gross margins rising as growth picks up?
See, we have put in plans in place over the next couple of years. We should take the gross margin further up. There are three major contributors we are working on. One is to increase the revenue share from the advanced markets. Second is to increase the license and AMC share in the total revenue. Third, we are also working on some execution efficiency improvements. All the three should contribute to increase the gross margin, which we did at 53 in Q2, to take it further. We are on a journey over the next 2 years. We should see hoping towards the 60% mark, probably over the 8 to 10 quarters.
Okay, so then any indications, early indications, what FY17 growth will be like?
We need to wait because we have a planning session sometime in February, March of next year. Once the planning is done, we should be able to come out. But what we have given some of our investors is we delivered 100 million in year ended March 15. So we say we should double the revenue to 100 in 3 years. So we are in that plan. For the next year, you hold on till we finish our planning cycle and come.
Okay, so you will double your revenues to $200 million in the next 3 years compared to the $100 million that you did in FY15. Let me come back to the margin picture. You spoke about how your gross margins could inch up to 60% mark. Since you will be positive in Q4 of FY16, could you roughly tell us what the EBITDA margins would be for FY17, not the gross margins?
See, what I would suggest is, though we would be we are saying we will break even or EBITDA positive in Q4, but that's not the end of the story. It's a 1 quarter. We still have to be in the investment phase for a couple of years to get accelerated growth. We are in a growth cycle, so first 2-3 years will be in investment mode. And we will look at gross margin being an important parameter, then EBITDA for some point of time. But when you reach a level, something like 200 million, to getting 25% EBITDA would be an easy norm which we can work on. We would get about 60% plus gross margin, and 35% will go for the rest of the costs. So therefore, getting into a 25% EBITDA at 200 million level is what the cost structure we are planning at this point of time.
All right, sir. Can you quantify the investments that you'll be making then?
Yeah, there are 3 lines of investments particularly. One is on the infrastructure in terms of a design center, in terms of delivery capability. We will do some supplementary investments over there because most of the investments we have on delivery and engineering center owned by us, and we have sufficient capacity there. We want to build a couple of more design centers, one in US, one in UK over the period of next couple of years. That is one such investment. Second is on our R&D product development, which will remain at current level of 20 million. We don't see that going up beyond 5-6% this side or that side. The only investment we'll be making on sales and marketing. We have to get a reach. We are not present everywhere. We need to expand our reach and presence. Therefore, we'll continue with the investment on sales and marketing to provide us the accelerated growth which we are planning. So the major investment will be only on sales and marketing.
Okay, Mr. Swaminathan,